And for more analysis on the technology sector, we're joined tonight by Chris Ciaccia, technology editor with TheStreet.com. Thanks for joining us tonight.
Thanks for having me.
All right, well, let's talk. First, I want to talk about Twitter because this has been sort of a definite stock to watch over the past little while. It's dropped about 20% over the past 5 days. What's going on there? Why are investors on Wall Street worried about Twitter right now?
Well, Twitter's big problem right now is the fact that it's not growing its users as fast as Wall Street wanted. When it recorded first quarter earnings, it had 255 million users, up from 241 million at the end of the fourth quarter, but that's not as fast as Wall Street wanted. It looks at Facebook as the predominant play in social media. It has over 1 billion users, and it doesn't see Twitter getting there anytime soon, if ever, so that's why the stocks dropped.
Okay, so what does it tell us about Twitter? I mean, is it sort of a niche play within the social media areas? It's not going to be as big as Facebook. Who's using Twitter? That's
what Wall Street fears for right now, that Twitter is just going to be a niche company. Journalists, people who are interested in getting their news really fast, and a couple other celebrities and sports figures, they're the primary users of Twitter, but the average mom and pop, they really don't see a need for having Twitter, and that's why Twitter's tried to make it more accessible for the average person. They've changed the login, they've changed how photos are on it, they tried to make it more like Facebook.
User-friendly.
Very much user-friendly.
Okay.
So we'll see if that works out.
All right, and in terms of, there was that lockup period where the initial investors couldn't sell their stakes in the company. Well, that period has passed, so we saw a huge amount of shares coming onto the market earlier this week. Give us a sense of how many shares were traded.
Well, the average volume on Twitter is about 15 million shares a day. When the lockup expired on Tuesday, 134 million shares traded. So that's a huge jump from the average daily volume. The company said that they wouldn't be selling, well, the CEO wouldn't be selling, co-founders wouldn't be selling, but that doesn't mean the early employees and other early investors couldn't sell. These companies, these employees are getting shares at around $2 or $3, so they don't really care where shares are trading right now in the open market. They're just about to make any kind of profit.
All right, okay, let's talk also about the big news of the week, Alibaba's filing for its IPO. How nervous do you think some of the e-commerce companies in the U.S. are? I mean, does this mean, do you think Alibaba is going to try to really tap into this market?
Absolutely. They wouldn't be raising, $15 to $20 billion in an IPO in the U.S. if they weren't going to go after companies like Amazon, eBay, or Walmart in their e-commerce plays. So this is really a big thing for China and for Alibaba, which is the world's biggest e-commerce company. They're going to attack the U.S. market, but they're going to do it strategically.
And when you say strategically, what do you mean by that?
They're not just going to rush into the market and expand into multiple areas all at once. This $15 to $20 billion IPO gives them a huge war chest. They can go out and buy companies that help them with areas of business that they're not already in. It allows them to expand on existing products, and they're going to actually market and brand themselves to the American consumer.
Okay, and in terms of acquisition targets, what do you see as ripe for the picking right now for Alibaba?
Right now, mobile is really hot for them. They have 130 million users for mobile, but they're trying to compete with companies like Tencent. So I could see them potentially buying a company like Line or perhaps Kick as well. And
what will be some of the challenges for Alibaba if they want to really get the retail, the American consumers buying stuff off their actual website? Do you think that will happen?
Yes, I do. I mean, you can buy from an American consumer standpoint. You can already buy stuff on Alibaba right now. But the big thing is people in America are already entrenched buying stuff from iTunes or Amazon or whatever. So they have to really market themselves to the American consumer to say, hey, we have better products and a better product differentiation, and we offer something a little bit different than Amazon, eBay, or Walmart already does.
So do you expect to see a huge marketing blitz for Alibaba here in the U.S.?
Over the next 6 to 12 months, absolutely.
Okay, and let's talk about Apple. We saw that the shares are trading above $600 a share. So is this sort of the comeback of Apple?
Well, Apple actually never really left. It's just Wall Street's opinion that it did.
Okay, but in terms of investor opinion, why are investors excited about Apple again?
The second quarter results were actually much better than Wall Street was expecting, and it was led by the iPhone. They sold about 6 to 7 million more iPhones than Wall Street was expecting. Apple's iPhone brand is really expanding throughout the world in countries like China and Japan, where they're now actually the #1 smartphone by market share, and other countries in Asia like Thailand, Taiwan, and Singapore. The iPhone is really taking hold, and it's due large part to the 4S and Apple's mid-range iPhone 5C.
So you see the stock going much higher on Apple?
Yes, they've made some very, very shareholder-friendly moves. They've added to the buyback. They've announced a 7-for-1 split. They've increased the dividend. So I would expect as the next iPhone comes out later this year, we expect to see Apple shares trade higher.
Okay, and give us the breaking news about Apple quickly. We've only got about 30 seconds left. What's the acquisition news we're hearing?
Late reports came out tonight that they are in talks to buy Beats, the headphone maker, and subscription music services for a little bit over $3 billion. This is a really big thing for Apple.
Okay, and how do you think it's going to impact the stock tomorrow?
I think Apple shares probably trade down on this news.
Trade down. Okay, that's your call. Thank you so much, Chris. That's Chris Ciaccia, technology editor with TheStreet.com.